Currency. It's the largest and most liquid market in the world. Now more than ever before, currencies are emerging as everyday investors' weapon of choice in the battle to gain an edge. I'm Bridget Taylor, and this is Currency Wars. I'm joined by Warwick Butler, ZAR spot trader at Standard Bank, Danny Pinner from Tradition. And before we go any further, let's look at the last week's victories and casualties. On the international front, the turmoil in Syria has oil trading at its highest levels against the rand and open to further pressures, with Brent crude currently trading at $115 a barrel. In the United States, Federal Open Market Committee will in a September meeting probably taper its bond buying. This is according to 65% of economists that were surveyed last month. Federal Chairman Ben Bernanke is expected to press on with purchases until he sees a substantial improvement in unemployment, which was 7.4% in July. On a more victorious note, recent data affirms the view that we're in fact seeing signs of a credit-led recovery in the United States. The ISM manufacturing PMI came in at 55.7, its highest level since June 2011, as weekly jobless claims dropped by 9,000 to 323,000. This was lower than the lowest estimate of economists surveyed. On the home front, strike action continues to elevate the weakness of the rand compared to its emerging market peers. We did, however, see a slight recovery on Wednesday after striking gold miners made concessions in their demands. This is seen as a big step towards resolving disputes in the sector. But all in all, underlying fundamental issues plaguing South Africa remain a risk to further currency weakness. South Africa runs a ballooning current account, and growth is projected to only be 2%. With the labour market unrest, we still have lower productivity levels to contend with. Now that we know the lay of the land, I'd like to welcome Warwick and Danny to the studio to chat about where the rand and the currency is going in the next week. Welcome. So it's been a tumultuous week. We've had a lot of activity. I mean, the rand in good rand style's done a proper 20-cent move. Where to from here? Because as we end the week, we're back below 10-20 levels again. You know, what do you think with regards to a couple of things? One, the strike action. Two, what's happening with regards to the Fed tapering and the foreign flows that we continue to see.
We've had quite a busy week, as you say. The market is certainly in raptures about what's going to happen with the US Treasury and the US Fed next week.
You know, we've seen that strike action Marikana last year. That was the big pullback above that 9 level again, and we've only just gone south after that.
Absolutely. I think the local story combined with the offshore story is what drives the rand.
Great. Thank you so much for those views. That was the top two calls this week from Danny and Warwick. That's the strategy for next week. Until next week's Currency Wars, good luck in the trenches.